information and transparency with accountability for players and customers within the financial market. So we're going to look at how financial reporting, disclosure, and transparency with accountability plays a role with regards to financial regulation and policy. At the end of this lecture, I expect that we understand financial reporting standards and frameworks. We examine some IRS, that's International Financial Regulation Standards, and regulatory compliance requirements. Then special requirements in financial institutions. Then we evaluate assembly and market discipline and cost and consequences disclosure regulations. Okay, so let's look at introduction to financial reporting and disclosure. So saying that when it comes to financial reporting, it communicate financial performance and position. So anytime players meet, they want to know the financial performance of certain organizations as well as their information to be able to make informed decisions, especially with investments, as well as when and how to buy shares within organizations. Hence, transparency and accountability. So once we have investors, they always want to have information available to them with regard they've invested their monies, thereby making sure that every information that they need to be able to make information and for management to be accountable to their shareholders are available. So we go ahead to say that transparency supports investor confidence and market efficiency. Anytime you have investors, transparency is something that as an organization you should not overlook because it boosts the confidence of investors. It helps them to understand the information. It helps them to understand what is happening within the organization and whether investment is doing well or not. Financial institutions require high quality disclosure due to systemic importance. It is very, very important for financial institutions to disclose whatever financial reporting information they have. And this is something that they cannot do away with because it helps them or it helps the system itself to be able to get more transparent for investors to understand, investors to know how and when they should invest, for investors and customers to know what is happening to the organization so as they can take or make an informed decision about the organization that they are dealing with and the organization they may want to invest in. Let's look at some financial reporting standards. So we are saying that financial reporting standards guide the preparation of financial statements. Now, when it comes to financial reporting, we have standards, especially the International Financial Reporting Standards and sometimes the International Accounting Standards. It helps the organization to prepare their financial report. There are some rules and regulations, or there are some guidelines that are given to them for them to conform to. so they can go beside whatever is within the standard to guide their financial reporting issues. And we're also saying that it helps promote consistency, credibility, reliability, and transparency. So key standards include the International Financial Reporting Standards, as I have mentioned already, and regulatory authorities monitor compliance with reporting standards. So anytime the regulators comes to the organization to check them as part of their regulatory work, they monitor and make sure that companies are complying with the International Financial Reporting Standards, making sure that all that they are reporting conforms to the standards given to them when it comes to financial reporting. Let's look at the objectives of financial reporting. We are saying one, it helps provide useful information to investors and stakeholders. As I've mentioned, it is very important for organizations to prepare financial reporting because investors need it. Investors look at them and investors see them as their source of information to be able to know whether or not where they have invested their monies, the companies are doing well or they are. And it also helps them to make an informed decision as to whether to reinvest or possibly take their money and walk away peacefully. Two, we are saying that they support financial decision making. And three, it promotes transparency and accountability. Four, we're saying that it reduces information asymmetry. The other time, I told you what an information asymmetry is. So when you say financial reporting helps reduce information asymmetry, who can explain this for me? How does financial reporting helps in reducing information asymmetry? Yes, who can help before I call names?
Hello, Doc.
How does financial
Yes. Hello,
reporting
bro.
help reduce? Yes, sir. Gazy.
Yes, please. The financial reporting gives users an equal information to make a decision. Thank
Good. Thank you so much. All right. So at that point, we will not have information. The other will, it reduces information as when both the organization and investors have equal information to use to make an informed decision. And five, we are saying that it helps to facilitate regulatory supervision. So anytime regulators come around financial reporting, whether you are going to the standards within the financial reporting standards, tells them to cite your organization and know if you are conforming to the standards or you are not conforming to the standards. It's also because at points they look at your capital adequacy. If your capital that they are within or for you to have as an organization, you are conforming it based on the financial reporting that statement have given them. So it helps to facilitate supervision. Now, we have component of financial statement. So when you say component of financial statement, you are looking at the statement of financial position. Most of you know it called balance sheet. So balance sheet is there as a component, profit or loss, or what others call comprehensive income statement. That is also one component. Then we look at the statement of cash flows. That is the cash inflows and the outflows of the organization. into details how the organization get their inflows and how monies also move out of the organization. A statement of changes in equity is also a component of financial statements. Then we have additional notes to the financial statement. So a typical financial reporting, we will be looking at the statement of financial decision, same as balance sheets. If you really want to do a proper ratio analysis, you need this, and you also need the statement of a loss. What do people know to be called profit and loss account or comprehensive income statement? Then you need the cash flow statement. You need the cash flow statement as well. That is how cash comes in and cash goes out of the organization. Then you also need the statement of changes in equity as well as additional notes to the financial statement. So these are the components of financial statement. And at any point in time, when you want to check if the organization is in a good position or not, when you pick the balance sheet or the statement of financial position of the organization, because that indicates the liabilities, the assets, as well as the capital of the organization. So anytime we want to see that or we want to check if the organization is in a good position, what we mostly look out for is their statement of financial decision. And if you also want to know if the organization is more liquid or not, we check their comprehensive income statement to see if at any point in time they are liquid in terms of either making profit or they are making losses. Then at any point in time, when you want to check the movement of cash, then either cash and cash equivalent or how cash flows within the organization, we check the statement of cash flows to be able to detect that. Then when you want to see whether there are changes in equity, we also look at the statement of changes in equity to do that. Then any other notes that could be attached to explain the information given above will be given to or will be given within the financial statement. Let's look at the International Financial Reporting Standard as a whole. So the financial reporting standards are globally accepted accounting standards that is being issued by the IAA. So anytime you want to see whether an organization is conforming to the standards or to the accounting standards, we check whether they are using the financial reporting standards or they are using the international accounting standards to prepare their financial statements. Anytime we want to check that, that is what we use. And this is adopted in Ghana to improve financial reporting. Now, once we all conform to international standards, Ghana as a whole, we have adopted both IFRS and IAS as a standard that we use to prepare financial reports. And it enhances internal comparability of financial statements. So when we are preparing our financial statements, it should be different from whatever is happening in other ways, in the other world, since we are all using the same accounting standards in preparing our accounts. Then we're saying that these are widely used by banks, listed firms, and multinational companies. Please let me issue a statement here. My light just went off, so I'm using my phone. So if the internet gets bad, kindly let me know. Okay. So Sam, if the internet at any point gets bad, please let me know. All right.
That's good. All right, sir.
Okay, good. So let's look at IFRS and regulatory compliances in Ghana. So Bank of Ghana requires regulated institutions to comply with IFRS, and this is compulsory. You need to comply with that. Listed companies by the Security and Exchange Commission as well as the Ghana Stock Exchange are required. All listed companies should comply with the Ghana Stock Exchange disclosures rule. So anytime you are making or preparing your financial statement, you are making information available, all listed companies must make sure they comply with the stock exchange disclosure rules. Then we have external auditors who come to verify compliance with the accounting standards, and regulators impose sanctions for non-compliance. So if regulators come, if Bank of Ghana come, if Security and Exchange Commission comes, if pension houses come, and you are not conforming as an organization under any of the regulatory regulators, you are not complying to the internal accounting standards, then it sanction on you to make sure that you conform to all the accounting and the financial reporting standards given by IFRS as well as the international accounting standards, codes, and ethics. Okay. Now, let's look at the disclosure requirements in the financial institutions. So, disclosure requirement promotes why is there a need for financial institutions to conform to the disclosure requirement given by their regulators. It tells us or disclosure of requirements promote transparency and market confidence. So once you open up or you give out financial statement, you publish your financial report, it helps to promote transparency and it boosts the market confidence because people will get to know how the organization is doing so that they can make a decision as to whether or not they need to invest or not to invest. Financial institutions disclose risk exposures and corporate governance practices. Disclosures cover capital adequacy, liquidity, and risk management. So anytime institution is making disclosure, they need to make disclosure on their capital adequacy, they need to make disclosure on their liquidity and management practices within the organization. Saying that timely disclosure also reduces uncertainty in financial market. It reduces uncertainty within the financial market. What are the types of financial disclosures? Let's look at the types of financial disclosures. One, we have the mandatory disclosure required by law and regulation. So this is mandatory. One type of financial disclosure is the mandatory disclosure. With this, you need to do that whether you like it at the end of the year, you need to publish your financial statement for everybody to see. And this you will not because as part of the regulatory framework, you need to mandatorily disclose your financial statement for your investors and customers to know. Then we have the voluntary disclosure provided by management. So management are also required to provide a voluntary disclosures anytime it is required by them. Then we have the quantitative disclosures, that is the financial data. You need to also make available one of the financial disclosure quantitative, making sure that you provide financial information and you make it available for customers and investors to see. Then we have the quality disclosures, whether you have to conform to corporate governance issues, making sure that you provide corporate governance issues and strategies. You give out all the strategies that you have mapped up in order to achieve your target, and you need to also provide assessment. So risk management comes under the qualitative disclosure. So these are the four types of financial disclosures. One, we have the mandatory disclosure. Two, we have the voluntary disclosure. Three, we have the quantitative one, which is the financial statement. Then four, we have the qualitative, which talks about the corporate governance issue, the strategies put in place, as well as the risk assessment issues in there. So these are the four basic types of financial disclosures that we have. Let's look at the disclosure requirement for banks. We've mentioned it earlier. The disclosures for financial institutions and banks is one of them. Let's focus much on one, capital adequacy disclosure. And this one, you need to state your capital adequacy because there are minimum capital adequacy that you need to provide by Bank of Ghana, and you need to conform to that. And this is so because they want to be assured that you have this X amount of money sitting in your vote, so that in case of anything, they can fall on that to either pay debt, or in case of losses, they can use that to defray the losses that is being incurred. Then we have the liquidity and solvency disclosures, and these can be brought out financial statement, within your statement of financial position, within your statement of comprehensive income statement, as well as your
Yes,
cash
sir.
flow statement. Your liquidity and solvency
Hello, sir.
issues must be discussed. Yes.
The capital adequacy disclosures. So the capital adequacy, is it in the bank's vote or you lodge it with Bank of Ghana in case of anything? So is it with the various banks or it is lodged with Bank of Ghana in your name?
Hello.
Yes, sir. Please, did you hear me?
No, I did not. My line
I
was.
said
Uh-huh.
the capital adequacy. You said you will keep it in your votes so that in case of anything, then it will be. Then I wanted to know whether the various banks keep those monies in their votes or is lodged with the Bank
Oh,
of
it's
Ghana.
not with Bank of Ghana, sorry. You lodge it
Oh,
with your Bank of Ghana. There's one that the bankers are here. They can tell us. There's some that is being kept at the vote that you need to
oh,
always keep it there. Then there's a requirement that you need to lodge it at the Bank of Ghana as well. Do I have who works at the bank? Is it Abaka?
Sir,
Yes. Okay. So take that for me.
okay, for that one, you have to log it because we have departments. You log out
Sure.
our bank department, which is CMU. They will come
Mm-hmm.
for the money, the excess that you have it in your votes. They will take it. Then from then they will also log it on the Bank of Ghana portal so that they will send the money there. That's how it.
Okay.
Yes.
Okay. All right.
Thank you.
Thank you. Madam, are you answered?
yes. So I'm coming to say so. We know that currently you need about 400. Is it 400 million
Mm-hmm.
for minimum capital? So you lodge some with the Bank of Ghana and then you keep some in your votes. Is that the understanding?
Yes, sir. The excess of the money that you have to log it on the Bank of Ghana portal so that they will come for it.
Can you explain that? They'll come for it as how?
Yes, that's what I.
Hello.
Yes,
Yeah,
we
we
are
are.
here.
Yeah.
Okay, what I would like to let's add is every bank have its policy. So let's say there's a maximum cash that you are supposed to keep out of, or let's say per 24 hours.
a particular bank might have, let's say, 1 million Ghana cedis. So if you
No,
have
what we
extra
are
cash,
talking about is the minimum capital
yes, that I'm
requirement.
So
Every bank.
the cash kept at the vault for daily operations is different from the minimum capitalization which you need for Bank of Ghana to know that you qualify for. So that amount, let's say, it's not only always, let's say, physical cash that you should have. But in terms of full disclosure, Bank of Ghana is okay. Your asset is worth 400 million. So that is kept at Bank of Ghana to safeguard, let's say, depositors in terms of, let's say, you being unable to meet depositors' demand, then you fall on that one.
Yeah,
Okay.
Gilbert, what if Vero, what I'm adding up to what Vero is trying to understand is that the minimum capital, is it part, the cash, is it put at the vote or is at the Bank of Ghana? Or whether part is kept at the vote or part is kept at the Bank of Ghana? The cash, that's what we wanted
Because
to
when
understand.
Sir was talking, he said the money you keep, capital adequacy disclosures, the money you keep in your votes. So that is why I came in.
And I also wanted to add to the Vero's
Finish
question,
and let
Prof.
me come in. Gilbert, okay. Continue, please.
I wanted to ask, I think Gilbert tried to explain my question, but I still wanted to ask that this capital, the minimum capital, is it cash or the asset inclusive?
You are asking whether it is cash or asset
I'm asking whether
inclusive.
it's only
It is not
cash.
only
Whether
cash.
it's only cash, the
Please,
minimum
it
capital,
is
is it
not
only?
only cash.
Uh-huh.
We are looking at
So it's
cash and
at
cash
the asset.
equivalent as part, and we are looking at asset as well as part.
Okay.
So
Yes.
when your bank is valued, both your assets
Yeah.
together with your physical cash is the minimum capital requirement.
Okay. So Bank of Ghana have a certain minimum capital requirement that should include your asset and your cash and cash equivalent. They value it to see that you meet that before they even give you, not sometimes, before they even give you license to operate. So some will be lodged. And remember, it even includes the ones that you keep in your vote. And that is why I mentioned the vote as well. So when you mention the capital adequacy, you need to have some that is being lodged at the Bank of Ghana and the one that will be lodged within your vote as well. So it is not just the one that goes to the Bank of Ghana, it includes the one that is also lodged at your vote because they have to sum all of them up to make sure that you meet the minimum capital requirement before your operation.
Okay. Okay.
Yeah.
Say,
Yes, ma'am.
I have a question. Is it in percentage or is an actual amount of money?
It is in percentage.
Okay.
Yes, it is in percentage. And most of the times, it is 13% of your risk-weighted assets. It is 13% of your risk-weighted assets. So it is in percentage. And that is how they can determine the minimum and the maximum.
Okay.
All right. Can I
So,
continue?
Prof,
Yes, continue.
the,
Yes, please.
please, the 13% is the minimum.
Yes, please.
So more than that means that the bank has higher capital adequacy.
Yes, please.
Okay, thank you.
You're welcome. All right. Any more
So,
questions?
yeah, Prof, I wanted to ask, please, do you not consider your liabilities too?
Do they consider your liabilities?
Yeah.
Of course. Capital is equal to what? Uh-huh. Who can help me? Capital is equal to what?
Asset plus liability.
Thank you.
Assets minus liability.
It's rather assets minus your liabilities. Okay. All right. Any more question?
So, Doc, sorry, Prof. So,
Yes, sir.
what's the minimum liability that they will consider before? before they will allow you to give the license. If I wanted to know that.
All that I know is that your capital adequacy should be a minimum of 13% of your risk-weighted assets. And when you
Oh,
say
okay.
your weighted assets, that includes your liabilities as well. So they don't have a percentage of a liability.
Okay.
Yes,
Okay.
sir. Once they do the calculation, including your liability and your risk-weighted asset is 13%, that should be your minimum capital adequacy. All right. Any further questions? Vero, are you okay now?
Yes, I'm okay.
Okay, good. Thank you.
You're welcome.
Okay, let's look at information asymmetry. So, like we've mentioned earlier, it occurs when one party possesses more information than another, and it's common in financial market and lending relationships. And this can lead to adverse selection and moral hazard. What is adverse selection? What is adverse selection? Mm-hmm. What is adverse selection in finance? Who can help me? Hey,
So,
finance
Doc,
student. Yes,
Doc, can I
sir.
say that when me and you wanted to do a transaction,
Uh-huh.
and then we are going to do a business, and I have more information than you,
Good.
I have a competitive advantage over you. But we are supposed
Sure.
to get information, equal information, so that we have a fair playing ground.
Okay.
That's what I understand.
That is adverse selection, and which is part of asymmetry information. So now bring it down to when it comes to make it more practical with bank. Use um use an example of banks giving loans. Okay, so how does adverse selection works when it comes to a bank and a customer that the bank is giving loans to a customer in terms of treatment? How does adverse selection works?
Uh, when you are going to take a loan, they are supposed to give you an information for you to understand the loan that you are taking. When you are not able to pay, the consequences of why not you paying. But some of the banks, what they do is they write it in small, small, which you cannot read all. So to me, that aspect you can see it an adverse selection. That's my take.
Okay. Who else can throw more light on that?
Good afternoon, Prof.
Yes, sir. Good afternoon.
Prof, my understanding is that let's consider somebody who goes to the bank to apply for a loan, right?
Mm-hmm.
If the person is not credit worthy but presents himself or herself as somebody who is worth that sort, and the loan is granted, then the adverse selection comes on board. He is not qualified to be given the loan, but he was not sincere and presented himself as somebody who is credit worthy, which he is not.
Okay.
Yeah, hello, sir.
Yes, sir. Who else? Mm-hmm.
Can we use the insurance company as an
Okay, we
example?
can use the insurance company.
Yeah, because when you are making a contribution, there are certain things you will not know until when it's time for claim. That's when they will be asking you for certain questions.
Mm-hmm. Okay. Who else can contribute? Yes. Who else? Uh-huh. So let me use the banks. Let me reiterate or throw more light on the bank. So a typical example is when interest rates are being given, and the bank can actually not differentiate between high risk and low risk borrowers, and they set the interest rate the same. Anytime they set the interest rate the same, it means that automatically they will push others away, especially they will push those who have or who are potentially low risk borrowers, they will push them out because they need to have distinguished between high risk borrowers and low risk borrowers. So once they set an interest rate to be the same for everyone, then it means that there is a play of what we call an adverse selection. Since they were not able to distinguish between high risk borrowers and low risk borrowers, once they cannot distinguish between the two, you realize that those with a lower risk will actually go because they feel that, okay, for me, potentially I can pay. So why not reducing the interest rate for me so that at least I can. But the banks will also not know who will pay and who will not pay. So when they want to set it as 20%, it is 20% for everyone, whether you are a high risk borrower or you are a low risk borrower. And this is also the reason why they have a lot of non-performing loans. Because once you cannot distinguish between those who can actually pay and those who will not pay, you mostly get non-performing loans within your books. Now, who can also explain what moral hazards are? Yes, who can explain what a moral hazard is? Who can help me? I'll start calling names. Bismarck. Abdul. Deborah. Who
I
can help me
think
with moral hazard? Yes, sir.
yeah, I think it occurs when someone takes more risk because they are not really affected
Can you explain
when
that?
things go wrong.
Your line was breaking a bit. Can you
Hello,
please explain
like
further?
somebody taking it occurs when someone takes more risk because they are not really affected when things go wrong.
How? Break it down.
For instance, someone going to the bank to take a loan, knowing that he or she cannot pay, but because it's not affected when it's not able to pay, doesn't care, we still go for the loan.
Okay. Why do you think that person will go for that loan? Even if he knows
Uh,
he cannot pay. What is the moral hazard there?
uh,
Because the person feels that he is protected. Because, for instance, if you go for loans, you know you pay insurance.
Yeah,
So
yes.
definitely, once you know you pay insurance, you know that if you cannot afford, the insurance will pay for you. So anytime people feels that they are protected, they go beyond their limits and take higher risk, knowing that there is something that protects them.
Okay. So say we can use the insurance company as an example. Let's
Okay.
say somebody goes for a car insurance, and
Mm-hmm.
because the person knows the car has been insured, sometimes you just pay about 2 months and then they drive anyhow, knowing that, especially those who go for comprehensive insurance, knowing that
Mm-hmm.
if anything happens to the car, the insurance company will pay him or her. So they tend to, though sometimes they tend to think about their lives, but an accident which will not maybe not take your life, but will affect your car because you think insurance will pay you.
Good.
Is it
All
a
right.
good example?
Very good example. So, how does information asymmetry lead to moral hazard? Use your same explanation. Yes, go ahead. How does asymmetry information lead to moral hazard? Yes. Please, can I be heard?
Yeah, probably I hear you.
Yes. The lady who just came to give me that explanation. I'm asking a further question using your same example. How does information asymmetry leads to moral hazard?
So, so-
Can I try my? Can I try
Please
something?
do. Please do.
So by Vero's explanation, then it means that if I'm going to take the comprehensive insurance, because all the information has been disclosed to me, and I know what I'm doing and the benefit that I'll get, the
Mm-hmm.
information given to me because of that, I can just do whatever I like. Then I'll get is like whatever I will do adversely will not affect me, but it will
Sure.
affect yes. So because of the information that I have, which is I've been well informed, so I know what I'm doing. It's like you have yes. I think that's what I want to. That's what I can say now.
Okay. Because you know you are protected and you have information that you are protected, you like I'm borrowing your language, you do anyhow because you know that if anything happens to your vehicle, the insurance company will come in and pay for you. Not that they will
Yes.
pay for you, they will indemnify you.
They
I
will
love to
identify.
use
Yeah.
that word. Yeah, they will
Yeah.
indemnify you.
Yes. Yes.
Okay. All right. So it can also we are saying that disclosure regulation help reduce asymmetry. How does disclosure regulation help reduce asymmetry? Yes.
Prof, I think this one has already been explained, where
Okay,
Emmanuel said,
so retrace it for us.
yeah, Emmanuel said, because let's say all parties have equal access to information, there's nothing like, let's say, preferential treatment.
There's nothing like what?
Let's say there's not a preferential treatment when it comes to, let's say, getting information. All parties have
Okay,
equal access to the financial information.
sure. So it means that it helps both the investor and the bank to have the same information, hence all of them taking advantage of the information available to them in order for them to use that information for the purposes at which they want to use it for. So once they all have the same information, it helps reduce the kind of risk that either the investor or the financial institution may end up running into. Because if you have information, you'll be able to use it to your advantage and to take an informed decision. Okay, thank you. So now let's draw more on the adverse selection and the moral hazard. We're saying that adverse selection occurs before transaction due to hidden what? Information. Moral hazard occurs after transactions due to hidden actions. Strong disclosure and supervision reduces these problems, and financial regulation helps improve market confidence. All these has already been highlighted. Yes, ma'am.
I want to ask a question, like, I don't know whether it's a question or confusion I need clarification on.
Go ahead.
So when Vero gave the example of the insurance, somebody knowing fully well they've done comprehensive insurance, so they can just drive anyhow. So my confusion is that information, the customer has it, so does the insurance company. So I don't understand where the adverse selection or the information asymmetry comes in, because both that information is known between both parties. It's not like the insurance company don't know that anybody that has done a comprehensive insurance can get these benefits. So that is where my confusion is
Okay,
coming. It's like
but
that
the
confusion.
insurance company will not know the hidden action of,
Okay.
do you
Of the
get it now?
customer. Yes,
Yes,
I get it now.
they will not know the hidden action. Exactly. Please, you are clear now. Good.
Yes, I am clear.
All right. Okay, let's move on to market discipline. So market discipline refers to monitoring by investors, depositors, and stakeholders. Transparent disclosures allow stakeholders to assess risk, and it encourages prudent behavior by financial institutions. It also helps support financial stability and accountability. So we are saying that market discipline refers to monitoring by investors, depositors, and stakeholders. Now, once it helps in monitoring, it helps in doing all these things that we've mentioned. It brings out transparent disclosures, which then allows stakeholders to assess the risk involved in the investment decision they are taking. And it also encourages prudent behavior by the financial institution, and it supports financial stability and accountability as well.
Hello, Prof.
Internet na jam. His internet is disconnected.
Hello?
He's gone.
Hello. Oh, okay. Yeah.
Internet.
He said he was using his phone.
Yeah. Some of us don't have light, so our internet is not stable.
President Pastor, take over.
Papa Sam, any information? His line is off. I'm trying to reach out to him. I think his phone is.
And there's a phone there, Dumo. And Yayaka.
Praise the
Oh,
Lord.
the internet, the new phone.
There be also the phone is off.
He
The
said
line.
he was using the phone. He
So
said he was
the phone
using
might
the
have gone off
President
also.
Pastor,
Let's hold on small. I'm trying to reach him.
Yeah, let's hold on. Yeah.
Gina, are you here?
He said his internet is gone.
Uh-huh. Knew it.
So meaning, hold on.
Let's
today
wait.
is messing up.
Let's wait.
He's
Hey.
reconnecting. Look and tell. He's reconnecting. Please hold on.
Yima, why you want to go? So mini kakrake.
I'm sorry. Another
Hey,
person
Asamu,
should
Erade.
another person should telling you.
So meaning
Ese
that
boy, I
The
would
internet
say.
call na mini Yapon.
Eh?
your point,
Hmm.
Ebeba,
Connect
he's
it will come
reconnecting.
in a few minutes.
Uh, light to the call of Sadia. Internet and say Jamuan. Yeah, Wi-Fi need a bit stronger than a hotspot.
Sandra,
Yes, Gilbert.
please connect Doc with Telecel, what do you call it, the internet.
Hey, I don't have it. Right now, the mini access to Omubiomo.
Oh, really?
Yes.
No insider dealing there.
There be oh. I just say
Right,
be
right.
all old people now I know no. Eh, be a.
Eh. Do something, engineer.
Oh, but
There be say
even
we there
with
be I just auto internet. I just auto be a bit to me
even with
connect.
that,
Eh,
and
be a
if you
na.
don't have light, if it's
Yes.
like one,
Yeah.
The data
it's
is
not working.
will be unstable. It will be on and off. It will be on and off. That's no call for there. Yeah, on and off.
I use stable net at home, but once the light is off, it means I have to connect my phone. But the phone hotspot is not that strong. So it will be on and off, on and off. So if you don't have light.
When the lights is off, you give it to me. Okay, very.
Anyone
Come,
working with ECG?
Is it?
Anyone working with ECG?
No.
There be ECG adjacent gazy your friends Ghana waterway. So me and you say the same government campaign.
Master Gezi, can you help?
Offer 0302611611. Number one.
By this time.
That be national.
Anyone from Befa.
That be national.
It's 24/7.
Office back. Oh.
He's back.
I'm back.
Yes.
Yeah. Yanko for ECG. That be national number 5. Eh?
So you heard it.
Yes, I did. Okay. So let's pray that the internet doesn't go off again. I've hotspot with my phone. So
Prof, I wanted to say something and your internet went off.
please go ahead.
Yeah, I was trying to ask the adverse selection and the moral hazards.
Mm-hmm.
Can we simply term them as, let's say, the disadvantages of financial reporting?
Okay, explain.
Like as they were using the insurance, what do you call it, packages, for example. Let's say those who are on this private health insurance schemes. I had an experience last month where the beneficiary himself, who works with the organization, is not making use of the insurance cover, but his dependents are overly abusing the insurance package because they have the disclosure that they can use it because they are dependents. So assuming, let's say it's one person, the wife, and let's say 3 kids. When the wife is going to hospital, she go with all the entire 3 kids as if they are all sick at the same time. We'll go and do a lot of, let's say, checks, go and see the ophthalmologist, go and see the specialist. Then they will carry huge pillows of drugs home, which is
That is not abuse.
the organization. So this is what I'm saying. Because of this, do we term it as a disadvantage?
No, not entirely, because as you mentioned, adverse selection and moral hazard are rather I would rather term it as a risk in financial system, which rather financial reporting helps to mitigate it. Because financial reporting rather gives more disclosure, which will rather curb or help reduce moral hazard and adverse selection. Rather, because I would rather say that they are, information asymmetry, adverse selection, and moral hazard are rather risk. I would say that they are rather risk within the financial system. It is not a disadvantage to financial reporting because rather it is financial reporting that rather helps to reduce the risk of adverse selection and moral hazard instead. So they are not disadvantage to financial statement. Financial statement rather helps to reduce that risk. I don't know
Okay.
if you understand what I mean.
Yes, please. Thank you.
Yes. Okay. Thank you. Okay. Let's look at benefits of financial disclosure. Why is financial disclosure very important? One, it helps improve investor confidence. Who can explain this for us? How does financial disclosure help improve investor confidence, even due to just the explanation I gave? Who can help? Yes, I think now I should be mentioning names. There are some people who have made it a point not to open their mouth and talk. Somebody like Enesakun, can you hear me?
Yes, Prof.
Enes, please talk. I want to hear your voice.
So it improves investor confidence. So investors need financial reporting to make decisions whether to invest or not.
Who else can add something?
I think it reduces uncertainty among investors.
How?
If they are privy to the financial, statement of the company, they're able to take certain decisions which otherwise would have been taken.
Okay. Who else can add something?
Hello, Prof.
Yes, sir. There's something I want to hear. Go ahead.
Yes, please. So when investors get to learn that a company is highly liquid and solvent, it encourages them that once they invest in such company, there is a high possibility that they are going to get positive returns. So
Okay.
it boosts their confidence.
Okay. It boosts their confidence also because of this key thing, transparency. When there is transparency, everybody feels comfortable either investing or working with the company. So once there's a financial disclosure, it brings transparency where investors can make an informed decision. Investors can do a proper risk assessment and in their mind becomes more open in their mind as to where they are going to invest their money. And it also helps them to know which market is growing and which market is not growing so that they will be able to invest properly. So anytime there is a financial disclosure, transparency becomes paramount and that helps improve investor confidence. Two, it enhances market efficiency. Gilbert, how do you explain this? Gilbert, can you hear me? Okay. Iris na or say Dumfe?
No,
Yeah. Okay. Yes, who is on the line? Please explain for me.
I wanted to say that it clears all doubts and fears.
How?
Just like
How?
the investor, just has the confidence.
Mm-hmm.
Yeah. So because you know the company that you are going into or to invest, and you have all the information available. I mean, all your fears or all your doubts of what you don't know is so clear that now you will fear putting your money into that company or giving your money to that bank.
Okay. Thank you. Who else can add something?
Hello, Prof.
Yes, sir.
So, when financial information are reported fairly, it makes the value of companies or the prices in the market, it reflects the true prices in the market.
Okay. Good. What again? Uh-huh. Yes, who else? Curtis, you want to add something? Curtis Kwachi Adakwa, do you want to add something? Okay. So because financial disclosure gives more information or makes information available, it helps enhances market efficiency because now people will no longer deal with normal speculation. They rather know what actually is happening without speculating. It also helps them, as I always say, it helps them to make an informed decision because information is available. And it also helps them to know what actually the prices are surging. So they can follow up price surging up or down, or making sure that they know the actual price as to when prices are being reduced and when prices are going up, because there is full information available. Hence, it boosts the market efficiency because of availability of information. Okay. It also helps reduce cost of capital. What is cost of capital? Uh-huh.
The,
Yes, sir.
yes. Cost of capital in this sense means lowering the amount a company or a business must pay. That is to obtain funds for its operation.
Okay. So
Yes.
how does financial disclosure helps to reduce cost of capital?
So can you say if you want to attract investors or customers,
You already
you need to
saying it, so don't ask me if
okay.
you can say. So say it. We will
Okay.
add up. Okay.
It's like maybe you want to attract more customers, you need to do more adverts. It's like normal business, you need to do more adverts. You have to convince, have to do a lot of promotion and all that. But because of the information is already there, and all this added to your cost later. So when all the information is out there, you don't need to do all those adverts. I mean, it's there and it's available. So the investor, it will be easily available to the investor. So you did not, you don't, there's no need for you to do all adverts. You don't need to do more promotion. All is the customer will be attracted to you by itself.
Okay. Who else can add? Last one, then I come in. Thank you. Yes.
Hello,
Hello,
Prof.
sir. Prof, I also
Yes,
think
sir.
that
Okay. So, Ose Boatin, after you are done, then Sam will come in. Go ahead, Ose.
okay. Yes, I think that once you make full disclosure,
It's clear what your books say. So if, for instance, it's a facility that you want to secure to fund your operations, because we know your books are good, it's even possible to negotiate better rates than if you don't make any disclosure and then we don't really know whether or not you are making profits at all.
Okay. All right. Good. Sam. Last
Hello,
from Sam, and I will come in.
hello, sir. Yeah, there's this concept that the higher the risks, the higher the return. So
Mm-hmm.
if companies or they disclose their financial informations where the investors assume that okay, the information they have provided are accurate and complete, it means that their confidence in that particular financial information or disclosure is high. Therefore, when they are giving facility to or when they are investing in that particular company, the demand for a higher return will be lower. In that regard, it reduces the cost of capital to that particular company.
Okay. So thank you so much. So just as we are saying, cost of capital can be seen from either when you are financing for debt or you are financing for equity. When it comes to debt, your cost of capital will be the interest on the loan that you need to pay, right? If it comes to equity, it is the returns that investors or shareholders are expecting. So when you say that financial disclosure helps reduce cost of capital, on the side of the lender, it helps to offer better rates because now
So we missed you at some point.
sorry.
We missed you. I don't know
Oh,
if
you missed me. Okay. So I'm saying that when it comes to cost of capital, we can look at it in terms of two, because when it takes companies, we have either you go for debt financing or you go for equity financing. So cost of capital on debt becomes the interest on the loan that you pay. Then cost of capital on equity becomes the returns that shareholders or dividend holders are expecting, right? Now, at what point does financial disclosure help reduce cost of capital? When it comes on the side of lenders, lenders can now offer better rates because they are now certain. Because financial disclosure reduce uncertainty. They are now certain who they are giving their monies to. If it is a company coming to them to borrow money, they have financial information available for that company to be able to ascertain whether they will be able to pay for that loan or not. So in terms of debt financing, it helps to reduce that uncertainty that makes you feel that, oh, this company will not be able to pay when we give them loan, because there's a full financial disclosure. Then when it comes to on the side of equity, that is investors as well, it helps them, or it makes sure that you have an expectation of lower returns. You know, investors mostly demand lower returns when the risk is high. You know where you are investing, you know where you are pushing your money. Once there's a full disclosure of financial statement, it helps reduce that cost of capital, because now you are very, very sure how much you will be paying or how much you'll be expecting in terms of your dividend that you have pushed into that company. So when you say financial disclosure help to reduce cost of capital, you can look at it from two sides. On the side of debt, which is on debt financing, and on the side of equity, which is equity financing. Debt goes with lenders and interest on the loan, and equity goes with what? Dividend that investors are expecting out of their investments. Any question? Okay. Now we come to say that, yes, Vero.
No, say I'm okay.
Okay, good. We are also saying that financial disclosure supports regulatory oversight. So, Vero, once you're muted, please explain this to us. How does financial disclosure support regulatory oversight?
Okay, so sir, with this one, I will look at it from two angles. So you, the one making the disclosure, and then the regulator. So because you know you are making your financial information available, you are careful as to what to put out there. So you go by all the regulations so that the regulators will not come chasing you. And therefore, regulators, because they have access to your information, they know what is in there, and so they know when to come after you or when not to come after you. So that is how I will look at it.
Okay, awesome. Who else can add his or her voice before I come in? Anthony Bia, I've not heard your voice since. Anthony. Okay, so I see Deborah. Sister Debbie, can you hear me? Deborah.
Yes, sir.
Okay, please say something. How does financial disclosure help support regulatory oversight?
It's rely on consistent data to compare companies' red flag or will not spend more time in chasing errors.
Okay, I like that. Osebwatin, you want to add up, then I'll build on the
Yeah,
first two that has been said.
I just want to cite a small example. So, for instance, Bank of Ghana visit banks. Their compliance team will visit banks to go through their documents to see if they are in compliance with the standards they are supposed to. So, if you've made full disclosures in your books, it makes their work easy. Just like when auditors come and you made all the disclosures you're supposed to make, it makes the work of the auditor easy. Rather than when you
Very,
have
very,
nothing, then they have to go around
yes,
fishing
because
for
there's a
information and
data to
everything.
rely on and monitor. You get
Yes.
it? Yes, because you've given full disclosure on your financial reporting, there's an available data that the regulators will rely on, and based on that, they act by following. And based on that, and based on that, they rely on that information and that they monitor if you are conforming to the regulatory standards being set for you. Okay. It also helps to promote corporate accountability. Yes, I'll need Gilbert. Gilbert, take this, then we take the last one. How does financial disclosure help in promoting corporate accountability?
Okay, Prof.
Yes, sir.
Okay, financial disclosures ensure corporate accountability by making sure that participants within the industry engage in fair trading. That is having equal access to information that prevents, let's say, insider trading and market manipulation.
Okay. Who can summarize what Gilbert said?
I think once information is made public, the managers of the various firms are forced to do the right thing, since they'll be held responsible by shareholders and investors.
Okay, good. So once this is done, we are saying that it helps to promote proper corporate accountability by making sure that it puts the company into proper scrutiny. It put that company into proper scrutiny. We will hold the shareholders. Shareholders will then hold management accountable to whatever thing they are doing there. Then, if there is any misconduct, obviously it will be very difficult to hide it, because definitely the financial disclosure will bring any misconduct out, and then shareholders will be confident to ask or to hold management responsible for anything that they have seen or has gone wrong within the organization. And we're also saying that it helps strengthen financial stability. And this is more self-explanatory, because once there's a full disclosure, financial stability will be strengthened. Everybody will know what went into or what goes on within the organization, where monies has been pushed to, where monies has been invested, where monies are being used for, and so on and so forth, thereby enhancing financial stability. Okay. Now that we know the benefits of financial disclosure, every benefit comes with cost. So let's look at the cost of financial disclosure. 1, compliance and reporting cost. There is no way compliance or financial disclosure will not come with a cost. So it comes with compliance and reporting costs, because you need certain things to be able to report properly. You need accountants to work for you, proper chartered accountants. You need auditors to come and verify. And it goes through certain processes to be able to give a full disclosure. So it comes with compliance and reporting costs. Then 2, competitive disadvantage from revealing strategic information. And this one, it is so, because every information will be published, both quantitative and qualitative, because at any point you need to give out all the strategies you use in making sure that your company's financial statement, or you are liquid or you are solvent. Hence, it exposes you to your competitors for them to know the strategies you put in place. So financial disclosure comes with a cost of competitive disadvantage, because the more you report on the things that you do, your competitors also look at the way things are done within your organization, and they will end up stealing your strategy or improve on your strategy to beat you down. 3, risk of information overload. There is a high risk of giving excessive information that in actual fact is not needed. Of course, it is needed for compliance and regulatory purposes, but you end up exposing yourself, giving even the weaker side of your organization to your competitors. It also brings out potential legal liabilities. Of course, once investors and other people get to know that this is what their monies are being used for, they will come at you. Some will even sue you. Some will tell you these are not what we agreed on. So it brings potential legal liabilities. And it also brings administrative and audit expenses. As I indicated, once you need the full compliance, obviously it will come with administrative and audit expenses. Let's look at the capital market consequences of giving financial disclosure. 1, improved disclosure can increase stock market liquidity. Who can explain this? How does improved disclosure increase stock market liquidity? Yes. Those who have never talked before in this class, please, it's time for you to talk. I don't want to mention names. Rahel, can you hear me? Rahel Agbogla, is that correct? Sandra, it's been a long time I heard your voice. Sandra Robin, can you hear me?
I'm
Hello,
here.
Sandra.
Stay.
Okay. Thank God you've responded. I hope today the kids are not disturbing you.
There they are.
Okay, manage. So please, how does financial disclosure improve stock market liquidity?
So because like information is not asymmetry, like your information is known throughout by investors or potential investors, people are more willing to buy into your stocks and trade in such firms so that it's going to increase your stock market's liquidity because information about the company, how they are performing, everything is being disclosed to the public.
Okay. Who else can add something?
So please, when a company discloses clearly, it's also easier for investors to value the stock because more people are willing to buy and sell because they trust the information they put out there.
Okay. Good. Last one. Yes. Who else can add his or her voice?
So there's something I also want to add that like pension funds and mutual funds invest in some of these companies. So when they know that some of these companies that are doing well based on the information that they have, these investment companies can invest their money and therefore increasing the stock market's liquidity as well.
Okay, awesome. So anytime there is a full disclosure, stock market liquidity increases because people will know how businesses are doing, how the financial market is going, and they will be able to either come and invest, buy more stock, or decide not to buy it based on how the information is given. It also helps reduce uncertainty and information risk, very self-explanatory. It helps enhances investor participation because now investors have all the information available so they can participate within the market. Poor disclosure may increase volatility and reduce investor trust. Very self-explanatory as well. Let's look at transparency and corporate governance issues when it comes to financial reporting disclosures. Transparency and corporate governance issues. So we're saying that transparency strengthens corporate governance systems. How does transparency strengthen corporate governance? Yes. How does transparency strengthen corporate governance? Papa Sam, how does transparency help strengthen corporate governance?
Yes, so Doc, since informations are transparent for everyone to see, and when we talk about corporate governance, it's like a system or rules or practices that the company is being directed or controlled. So it makes the work so simple and easy because the informations are there for everyone to see.
Okay.
So I think one other aspect is that if the board of directors are able to see how the company is performing, they'll be able to tell what is going wrong and then put measures in place so that the management don't misuse funds. They know where funds are going, whether it is what they have agreed upon, so that there's no mismanagement of the company's money.
Who, Oscar, please mute yourself. Thank you.
Okay.
Okay. All right. So, 2, disclosure supports board accountability. Once there's a full disclosure, it helps support accountability of the board, because board will then be accountable to their stakeholders. They'll be able to report properly. They'll be able to give full information to the stakeholders. It enhances stakeholder trust and ethical conduct. So the stakeholder will know when and how he needs to come in, whereas the board will also know how and when they need to report on the issues with regards to finances. It helps weak governance. As we say, weak governance often contribute to financial scandals. This one we all know. Once there is a weak governance, it has happened. When you look at our banking cleanups, one of the main issues were corporate governance issues, and there were weak governances. So it helps to often contribute to financial scandals here and there. And that is where you hear that a CEO is the same as the board of director, one of the board of directors, or he's even the chairman of the board of directors. A shareholder will be a member or the chairman of a board of director, because if a shareholder is a member of a board, all that he does is that he seeks his interest, because when he maximizes profit, he works on making sure that every profit that is declared, instead of sometimes reinvesting some or applying it back into the business, he will say that go and declare so that we pay dividend out of it. So this normally brings issues with financial reporting, or it brings scandals within our financials, within the organization. Sorry. Okay. Yes, please.
So with the issue of with Capital Bank, where the CEO was imprisoned, right? So I'm trying to see why he was the only person that was held accountable, but any other person within the organization did not face the law like he did.
Okay. So the first question is, why was he the one who was in prison? What was his
Yes.
offense?
Yeah.
I'm asking you, or you
See, I
don't
think.
know?
Hello.
Hello.
If you ask me, I think some of the decisions that were taken were political.
How?
Because
From the charge sheets, that was reported, it was reported that it was through mismanagement, because he used most of the funds that were given to them to improve their operation. He used it for his personal gain. He was throwing party left, right, center, buying new cars and all that. That's from the charge sheet.
So my question was, so nobody approved or nobody saw it? That's where I'm coming from. Like,
He was the
I
board
think he had
chairman,
board
as
of
Doc
directors.
said.
Okay.
Yeah, as
Okay.
Prof said, the board chairman. He was chairing most of their board meetings and all that, and approving funds. That's from
Oh,
the charge
okay.
sheet so far, right?
Okay. Okay.
And that's why
Hello, Doc. Hey, and I'm in network in here. Hello?
internet
You are,
Nadia.
Oh, okay.
Break time, please.
Our dog is still online.
Is the network?
The network.
Network na.
Papa Sam, can we go for break for like 10 minutes before we go?
But your dog got a call.
Break it.
Get some water. He'll be back in a short in the jiffy.
Charlie. Another demanding thing
But
to Scott.
but yeah, 2 hours. Who say yeah, I say so.
Yeah,
So say
6:30 not 7.
okay.
Yes.
Monday to Friday, weekends to
Very, can you take over?
Sure.
Let's continue.
So, who was talking? Sandra?
Thank you
Me
very
busa
much for
question
holding
no.
court
Me
for
na
me.
me busa
So,
question no.
Sandra.
Nti mo
And so
answer me
let's answer him.
question. Eh, mo
It's
answer
one
me.
answer, more answer.
So I'm back. Who was on the floor?
Oh, so.
Sandra.
Vero,
No,
thank
no,
you
I
for
asked the
holding court
question.
for me.
Oh, please.
Yes, she asked the question. And Prof,
Yes, sir.
to my knowledge, I think the
Of your
Asian
screen
Capital
is
Bank issue.
awful.
Yes, I'll send it back. I'll bring it
Okay.
back. Don't worry.
Okay.
Some of the individuals that were appointed on the board lacked the requisite expertise to serve on the board. So because of that, the CEO used their, let's say, ignorance to exploit them. That's why he alone was incarcerated.
He abused all the corporate governance ethics. In fact, he abused
Yes.
everything from Basel 1 to Basel 3. He abused all the corporate governance issues. And that is why it was so easy to jail him. Because he goes to the board, take a decision, then he comes back and sit as the CEO and spend. And most of the appointment of the board of directors were done by him and himself. There were family members of him as well, even sitting on the board. So for his case, in fact, if I were to be the judge, I'm not sure I'll even spend 2 seconds to jail him because it was quite clear as to how all the regulatory frameworks were abused and he mismanaged a lot in there. Yep. Okay. So let's look at the disclosure regulatory theory. It explains why government regulate financial disclosure because the government, when you say government regulate financial disclosure, we have the government agencies or the government bodies. They setting the regulations for those under them to follow. The Bank of Ghana, the SEC, that's the Security and Exchange Commission, the National Pension Regulatory Authority, the Insurance Commission, and so on and so forth. It focuses on correcting market failure and protecting investors. It also supports efficient allocation of capital, and it helps balances transparency benefit with its compliance cost. I'm trying to finish early because my internet is getting bad and bad. I don't know. And ECG has still not brought back my light. Do I have somebody working with ECG?
Dog, I have a question. Can I
Please
ask the
go
question?
ahead, go ahead, go ahead, go ahead, go ahead.
Yeah, I just want to ask, in addition to what Sandra's just asked. So the central bank, they have the supervisory department, right?
Yes, please.
Yeah. So in the case of the capital bank, why are they not also not arresting those who supervise the bank? Because I don't think they would definitely, as they go, they have intermittently go there to check. So why is that they have been said, or let's go, or they have been let off the hook, and yet only that guy, that man was only arrested and jailed because because I hope that the main aim of the supervision is to ensure that the banks go by the regulation and whatever has been put in place, or they should follow. So why is that they are left the hook and the man alone was arrested?
Okay. Regulations are meant for people to follow. what Bank of Ghana can only do is to come and check if you are following it. When you are not following it, they write to you and ask you to follow. That's the best they can do. They don't have the powers to prosecute until there's an issue. So they can only go to court and be witness. So Bank of Ghana was a witness to that case. Whatever regulatory body was a witness to that case. And they will go and indicate that indeed we went there, ABCD was happening, because they don't have the prosecuting powers. Please, you understand?
Yes.
Thank you. A
Clear.
very simple answer because it's more political. I don't want to. Yes, please.
Okay, then what I'm going to ask, maybe it might also sound the same also.
Thank you.
Because
Thank
in the
you.
name of in the case of is it NAM1?
Yes.
NAM1 operated for a very long time. What was the regulator doing?
Oh, they were writing. Have you forgotten?
Yeah,
Yeah,
SEC.
so how long do you
Yeah.
have to write?
They can only write to caution people. They can only write to them. And they can only have powers to stop their operations.
Exactly.
But you see, I've always said this, that isn't one is working as a free man.
Exactly. And people's monies are locked up.
But you can't touch him. That's
And the
one thing.
regulator is also working around.
What do you want the regulator to do?
But say, how long did NAM1 operated before the regulator came in?
You should ask me how long did the regulator get to know that he was doing that transaction? Because as far as they were concerned, Men's Gold was not registered as a deposit or as a financial institution that should be accepting deposit and investment. And that is why SEC came to write. And later, Bank of Ghana also came to write. For me, I've always had this position. Look, there is no investment that can give you 100% returns in a month. Tell me I'm lying. There is no investment.
You are not lying, but you see,
yes,
your level of education and what you know might not be the same as the woman in a Mokola.
Who
Who
but
invested
that
the
woman in
money in
Mokola,
NAM1. So the regulator
listen,
knew that the woman in Mokola is depositing her money with NAM1.
that same Mokola woman can equally not read because the regulator will write. So if the regulator writes and that same Mokola woman was not able to read, how would that Mokola woman understand what the regulator is saying? For me, yes, we can blame the regulators, but I don't solely and entirely blame them. Let me tell you the honest truth. If you look at the people that actually invested in Men's Gold, less than 5% of them are the Mokola women you are referring to. The highest chunk of percentage of the people who invested are elites or were elites. And
So
they
most of them were
understand.
MPs.
Sorry?
Some were even MPs.
Thank you.
Members of
They
parliament.
understand high risk and low risk. When returns are high, please, it means that the risk involved is equally high. With now one case, I've told you, and I've always stand by this position. Anybody who invested in Men's Gold can potentially do juju for money.
Cocaine.
because I don't understand why, as a normal person, you see, the man was even saying that he was dealing with gold. You come and buy gold, and he go and sell the gold in gold market and give you the returns. Basic question. How many times do we sell gold? Gold is sold only once. So how can you go and buy gold And every month, he's giving you returns on the gold that he has gone to the gold market to sell on your behalf. A basic question. And if you are not able to answer this, it means that you yourself know what you got yourself involved. And he's working as a free man because he registered Men's Gold as a limited liability company. The best or the worst they could do is that they sold off all the assets of Men's Gold. After selling off all the assets of Men's Gold and it cannot pay those that had invested, you cannot go and sell them once a personal property. It doesn't work that way. So I have my own reservations about that. I actually have sympathy. I sympathize with those who invested all right, but I feel that, sorry to say, they were too greedy.
Very greedy. Very greedy.
I didn't say that.
Some even stopped their job or left their jobs
Of course,
to
you will
sit
leave
at
your job
home.
because if you have, let's say, 500,000 with NAM1 and he gives you 50,000 every month, hey, madam, you will stop your work. Oh. If I were even part of those people, I would have stopped working because that was a very
Good
I
return.
mean, it was a cash cow. Every big cash cow comes with consequences. They ate the cow and they met the bones. So, okay, let's box on. Public interest theory of disclosure regulation. So we're looking at public interest theory with disclosure regulation. So disclosure regulation protects investors and promote fairness. So the public have interest in there. Why? Because it protects investors. Investors forms part of the public. And it also helps promote fairness because you'll be able to get available information to make informed decisions. Government intervention addresses information asymmetry. Yes, because regulations are there. It forces you to give out your financial disclosures so that people will have the same information that is available to you as an organization to make an informed decision. It enhances public confidence in financial market. People will now have confidence in either they are operating in capital market, that is either secondary or primary market, because information is available to them. So common in prudential regulation framework. It becomes very common when it comes to capital adequacy and the rest, because you have a proper risk assessment management in there. You have all the capital adequacy requirements in there, and it will help shape organization to form or to conform to the regulatory frameworks given to them. Let's look at the private interest perspective. Once you've looked at the public interest, disclosure regulation may reflect lobbying and industry interest. Powerful firms may influence disclosure requirements, and regulators must balance competing interests and highlight political dimensions of regulation. So when it comes to the private interest perspective, we are saying that disclosure regulation may reflect proper lobbying and industry interest. Powerful firms may either influence disclosure requirements and also regulate
Is it my network?
No, dog is gone again.
Oh, okay. My lights just went off. I was thinking it's mine.
Hmm.
And then the ECG, normally it is a disco light.
Any ever to us way, the dog children to us so fire.
Umusa.
One Gilbert way.
Private interest, right? Private interest perspective.
Yes.
So we highlight particular dimensions. Now, point disclosures reflect lobbying. Powerful firms may influence disclosure requirements. Regulators must balance competing interests. So what does it mean?
Explain, yes, what does it mean?
Now, I'll say, so what do you understand?
Any bubodi mommy dio da bubodi. Call Ibrahima. And then Marshall.
Veronica, come again.
There also Kwana.
There be Omewaha.
Network be say call Ibrahima and Marshall.
Ibrahima.
Sandra, continue for us.
Ibrahima, so they said the private interest from the private interest perspective. The third one is regulators must balance competing interests. So what does it mean?
I don't know unless you help me.
So somebody should help him.
Come again with your question.
They said, you say we were looking at the private interest perspective.
Priority. Is it priority?
Yes, private. Yes.
Okay.
We've already done the public interest perspective, so now we are looking at the private. And the point 3 says that regulators must balance competing interests. So
okay, let me try.
Okay, try.
Okay, regulators. Gilbert, come.
Come again, you said the
regulators must balance competing interests.
Oh, okay. What I will say is maybe regulators intervening to safeguard investors from, let's say, fraud, while allowing, let's say, new financial innovations like fintech or cryptocurrencies to, let's say, take place in, let's say, an economy or the market. So because fintech and crypto is, let's say, a new innovation which the regulators are yet to, let's say, catch up with, by the introduction of financial disclosures will enable the regulator to put in stringent measures that will safeguard potential investors from being defrauded by, let's say, these perpetrators.
Good. Do we have
come again? No. Go ahead.
Yes, please.
Come again. I didn't understand it. You are
what I
saying
was
that...
The similar ask Gilbert to come again or repeat.
Yes, I wanted to repeat like the explanation. I didn't hear him well.
Change your statement.
Okay,
he cannot
please.
Come. He can repeat.
Okay, please repeat. I didn't hear the explanation well. So can you, I don't know if you can explain it in simple terms so that I understand it.
Okay. What I'd like to say is the regulators, you see, they don't operate in a vacuum, right? So they constantly have to balance competing interests to keep markets fair, stable, and attractive. So that's why I was saying that in their bid to make sure that there's full disclosure, the regulators intervene to safeguard investors from fraud while allowing new financial products like cryptocurrency and fintech to, let's say, take place or flourish in the market.
So, Vero?
Yeah, Sir is back.
Yes. So, hello?
Sir is back, please.
Okay.
I only come in when say it's not around.
No, kindly continue. I want to know what we were discussing before I entered that.
So we're looking at we're looking at the private perspective of the disclosure. So we're looking
Okay.
at the third point. Regulators must balance competing interests. That was what he was explaining.
Okay. So has he finished with the explanation? What did he say? I heard Sandra saying that he should come again. So, to borrow Sandra's word, Gilbert.
Okay.
Repeat yourself.
What I was saying is the regulators don't operate in a vacuum, but they act in order to balance competing interests to make the market fair, stable, and also attractive by putting in stringent measures to safeguard investors from being defrauded by, let's say, this influx of fintech and cryptocurrencies that are flourishing in the market.
Okay. All right. Thank you.
Gilbert, I have a question.
Okay.
Okay.
T.A.
So
Gilbert, someone
Gilbert,
has a question.
Per the explanation you gave, can
Okay.
you give me an example of what the regulators are doing with this cryptocurrency to prevent
Yeah, you see,
investors from being defrauded? Yes. I want to see like an example of what they have done so far.
if you can, the BOG have adopted
Yeah.
this cryptocurrency, and they are in the pipeline raising a legislation to govern it. So it means the thing has come to stay, and they
So
cannot
far there
deviate
haven't
it.
been anything governing it. So it's just there.
Yeah, they are. Yeah, they are making amends to draft legislations.
Okay.
And even before they did that, if I'm not mistaken, I think I heard Bank of Ghana writing to caution people who want to go into that sector. So before the regulations are done, that Bank of Ghana will fully come in. They are cautioning people. If you want to go into the cryptocurrency industry, be careful what you go into. Because for now, they are now trying to come in. I think somewhere last year or early this year, Bank of Ghana wrote to caution people. So I think that's what the regulator is doing for now.
That's true.
Okay. Can I please move on?
Yes, sir.
Okay. Thank you. Thank you, Vero. And thank you, T.A. Gilbert, for standing in for me.
Thank you,
Okay.
sir.
Good. Let's look at the financial reporting challenges that we have in Ghana. Number one, obviously, there is weak enforcement of reporting standard. Very weak enforcement. There is no proper regulators are not really enforcing organization to conform to the financial reporting standards. So you see issues here and there. Under normal circumstance, every single year, at the end of the financial year, companies are supposed to publish their financial reports for members or people to see. When you go to banks, you see all the time that they publish their financial statement and they have to paste it at the bank for customers to have a look at them anytime they go there. So that helps them to understand what is happening. Limited technical expertise. Most companies actually do not hire the right people because they want cheap labor. They would rather hire people who are not chartered accountants, then they will pick one or two chartered accountants in addition to come do what actually professionals are supposed to do. I'm not saying if you are not a professional, you cannot do it, but there are some few technicalities that actually requires that professionals are able to attend to them. Delay in financial reporting. Some companies, organization actually delays before publishing or reporting on their financial statements. corporate governance weaknesses. The corporate governance issues where they need to conform to are not strictly adhered to. So we have corporate governance weaknesses in there. Then compliance challenges among smaller institutions. Most smaller institutions actually do not comply at all with the financial reporting standards in reporting their financial statements. So these are some of the challenges that is associated or that are associated with financial reporting in Ghana. Let's look at this case study with the banking sector cleanup. So we realize that if you actually look at the main issues that brought about the cleanup exercise, there was a weak disclosures which contributed to hidden financial distress, just as the man who was in prison. Poor governance, which affected transparency and accountability, that was one of the issues as well. Regulatory reform strengthened disclosure requirements. So once those issues happened, they strengthened their reforms on the financial disclosure requirement as well. Improve supervision, enhance financial stability. So the regulators must also improve their supervision. And that is why most people here were even accusing the regulators that they did not give a strict supervision. And that is why all those mayhem was caused by that very bank, and one person was in prison. So I'm sure if I left most of you as judges, you would have imprisoned most of the Bank of Ghana staff who were supposed to supervise this company or financial institution as well. Okay. Let's look at some emerging trends in financial reporting. So now financial reporting don't just look at just the cash flows and the bank statement. We look at the environment, we report on environmental issues, and that is why now we add qualitative as well. We report on social and we report on governance issues as well. Now, after that, we look at this integrated reporting where all departments gives their report, then we compile it. So it will not just be a guess report thinking that this is what is happening. We allow departments to give their report, then someone integrate all the departmental report to make it a full report. Digital financial reporting. Now we have gone more digital where there are softwares that we use in making financial reporting statements. There are real-time disclosures as well. We give real-time disclosures where every bit of information or everything that is happening on day-to-day basis are being seen and monitored. Artificial intelligence in auditing and compliance. Now, AI is taking over auditing. So the normal physical auditing that we know, there are tools and techniques that we use now in auditing that actually brings out a proper compliance with the regulatory framework. So these are the emerging trends in financial reporting. So in conclusion, I would say that financial reporting and disclosure are critical to financial stability. Transparency enhances trust, accountability, and market efficiency. Strong regulatory frameworks improve disclosure quality, and Ghana continues to strengthen reporting and compliance system. So day in and day on, we try as much as possible to strengthen our financial reporting standards and the way we conform to our regulatory issues in terms of compliance and so on and so forth. Okay. As usual, I always have a question to discuss, but this I'm not going to give it as an assignment. When the internet is stable within the next week, we will discuss these few questions. So you can go get some few answers for them. But don't submit. We will discuss it, which will in turn conclude all the things that we've done so far today. Thank you very much. Because of internet issues, we will end today. And next week when we meet, please, next week, I don't know. If by Wednesday you feel that we can meet as well as Sunday too. Our meeting on Wednesday have nothing to do with our regular class next week Sunday. So Papa Sam and Joyce, if you want us to meet in order to do something in addition to what we've done within the other weeks, kindly let me know. I'll make myself available. It will be a free Bono class. So if that will be done, please let me know. And as I said, it has nothing to do with today's week class. We will still meet on Sunday as well. But if
So,
you feel
Prof,
that, yes, sir.
yeah, Wednesday is a Eid day for us, the Muslims. I don't know if you can make the time in the
Okay.
evening.
Oh, sorry.
No, not necessarily we can sell. We can still go on with the class, but let it be in the evening, please.
No qualms. That's why I've left it for the class reps to decide. It is not compulsory. If you feel that we can, it is not part of our schedules. But if you want us to meet, I'll be available. So that should be discussed
Yeah, it's fine.
extensively. Yes.
It's fine for us to meet. Yes.
All right. Thank you. Okay. So, Vero, thank you so much for holding on the fort when my networks get back. And thank you, T.A. Gilbert, as well. So we will meet either Wednesday, if it is possible, and same time Sunday as well. Thank you very much.
Thank you, Prof.
Okay. Please be reading the lecture notes I sent to you. Within the week, I'll forward the rest to Sam as well, so that Sam can send it across.
Okay.
All right. Have a good evening.
You too.
Yeah.
Okay. Bye.
All right, thank you.
Thank you, Steve.
Yes, what?
So Papa Sam and Joyce will make a decision and give us the feedback, right?
Yes, I think they should. I think we can spare him some. I don't know about others, but since Wednesday is a holiday, maybe in the evening, we can spare him some 2 hours.
This is pro bono for us.
So let's all come together and see. Almost.
Okay, Vero, so I'm waiting for the table sim, man.
I said when my light goes off, when my light is on, how can I give it to you?
I need only the SIM card. Keep the
You
table.
need only SIM card.
Yes.
But I think you can buy from MTN or
The table SIM.
I don't know. I bought mine years ago. I don't know how the system is now. But I can find out for you if I can get the
All right.
bonus. But do you have the device?
I have the table, but I don't have the SIM.
Okay. And it doesn't take any normal data SIM apart from the SIM,
The
right?
MTN. Mm.
Oh, okay. So I can find out for you.
Okay. Thank you.
You're welcome.
Buy broadband there. Who tell yourself for an economical broadband?
Or Starlink. Unless Starlink is very good.
Me, use broadband. Broadband is cheaper.
Tell
You
yourself.
go, but you have a family. Yes, you have a family. So internet, you go feel now, you should be fine.
Hey. Oh God, please. I said when I finish, I'll come to you. No, I'm not done.
Please, see, you know, I can't 10 penny. What have you said?
Oh, mama, ya Wednesday class.
Wednesday, no. Senka 8 cry, 7 and papa ne day was too early, but at least your friend is saying
8.
the
8
8 would
bad.
have been better. Yeah.
Abusafo
That
ebi
time,
kɔ but ebi nkɔ.
at least, Yama cruise never them so monkoda. I know be a bit jam me ponso as this.
8 no be better. Na 7 ni there.
See, the ultimate pay good them so go them and I also.
Wednesday holiday, we can just meet around 9 to 12. Yeah, 2 hours meet. Now, keko. So at least we can rest for the next day. Yeah, be quick, man. And yeah, but
Yenya ni 9 oh. So no or can be say 7 to 11 or so. So na yes 4 hours wa 7 na no mo kan.
7 Wednesday is too early
7,
because
yeah, a bit early. I think 8 is not bad.
8 is not bad, but you know say acquire say the next day is going to be
Holiday.
People
Yeah.
that try business kakra and sana, so they will close later. Into mo kono mo koda bi mo sorry in time. Into even 8 o'clock nkra one here or sorry
So
I
the
met you so
9 a.m. 9 a.m. to 12 noon na be. Now I could
No,
lunch.
now Ibrahim and so say a bit okay for him because of celebration. No?
He's a Muslim. Oh.
He's a Muslim, so
Oh.
AM will not help him. If anything, it should be in the evening.
Hey. And I want you.
Okay, I want it.
There be no me and crying how much into Martin me earpiece man.
Or see AM there because of Eid and M1 and if anything, I ain't a man.
Wow.
You say go when I finish, I'll come. I'm almost
Hey,
done.
tell me man on fun it's a 7 and 8. Hey, 8 to 10.
What is it?
Yeah, Wednesday evening. Yen kind send yen for better as here there.
Saturday into me and Sunday into me and I just na possible.
But at least we'll take me 2 hours.
It's within the week, you know. Yeah, 2 hours be.
I think say 8 to 10. 10 you 8 to 10 will be okay. And that's a 7 to 9.
8 to 10 in your body, Anna.
Say who said the following day name for 10 now or more you ever put up in a bedam. And any answer.
Oh, 10 late.
Be late tomorrow move.
Okay.
Be more 10 late.
Oh.
Chino.
I said I'm coming.
I just say yeah, 7 to 9.
I told you I'm in a class, so you go. I'll come.
Me whatever goes. The time be am be I drew her and I'm joining.
I'm coming.
Me say be
I'm almost done, please.
Me say the obi abeke be 7 no yen to aba yen to aba yen yes 7 yen to aba 7 to 9.
AM there moi obi already obi I can say AM moi no that. If anything I should it will be in the evening.
Yeah, evening in Americans either say 7 to 9 and 8 to 10. Yen to aba the enkofo be agree on. Join at the any day. The majority be can any be this.
Okay, then call it a day.
Everybody.
Bye-bye.
Iris.
Bye.